Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, James DiBiasio. If you like what we're doing at DigFin VOX, please like, share, subscribe. My guest today is Alvin Kwock, co-founder and CEO of OneDegree, an Insurtech with an exciting Hong Kong consumer-facing business, as well as OneDegree Global, a SaaS vendor spinning off their technology for others in the industry. I spoke with Alvin about big trends in Insurtech, relationships between startups and incumbents, and how to turn niche products into what he hopes will be a very ambitious, globe-spanning business. Alvin Kwock, welcome to the program.
Hello, James.
It's great
to see you.
Yeah, thanks for joining us today. It's lovely to have you and to talk about your firm, OneDegree, which is making some waves in the insurance world. You've recently received a big fundraise, and you've got a lot going on. You've been around since 2016. Tell me, Alvin, has the vision for OneDegree changed between your founding in 2016 and raising new capital in 2021?
Yeah, well, it has been a journey for 5 years. And I still recall on the first day when we first founded OneDegree, we say that we want to build the operating system of the insurance industry. So where it really fits in is the 3 key pillars of that. The first pillar, on day one, we want to be licensed, we want to be regulated. So we got the first insurance license in April last year. Second of all, we say technology is extremely important. And we have been building the technology not after we got the license, but ever since day one when we first founded. And I think this is really starting to pay dividend right now because the product market fit, the flexibility of the core system and different things. And so I think that's those 2 areas I think are very clear. Okay, I think the one part that I think has been in a evolution process is the killer application on the product market.
Finding that killer application that makes your Insurtech stand out. Let's just talk about maybe a little more generally Insurtech. When you're talking about being a licensed player, building the technology, has the Insurtech landscape changed in this period of time? Because it feels like 5 years is now a long time in fintech.
Yes, absolutely. So if you think about the landscape back in 5 years ago, I think most of the players are only focusing on distribution.
Distribution, right? How to get product into new hands, new customers.
Exactly, and that is an easy way to get into the space, and for a very simple reason, because of the commission, right?
You gotta make money to keep the party going.
Absolutely, but what you start to see in these last few years, I think the market is really starting to move towards the full stack guys. Okay, full stack meaning that you go from all the way from product development to the manufacturing, the underwriting, and then down to claims, customer service, and so on. And the reason why this is happening is that what you really start to figure out is the pain point is not only on the customer acquisition. It's really on the product market fit, churning out the right product. And I think well, the COVID time really is a great time to show that well, things just keep changing, and I think you really have to have the right product that fit to the customers. And then, of course, on the claim side, which has always been the major pain points of the consumers, right? So, and I think that consumer centricity is also extremely important, and that's where we see why our customer acquisition cost is substantially lower than other people, really because of the really good service.
Yeah, so 5 years ago, the shared wisdom, I think, at least among the incumbents, was certainly that insurance is bought, it's not sold, and that claims have to absolutely be 100% human. How much of that has changed? Do you still think those axioms hold true for Insurtech?
Yeah, well, we do a lot of user research. Okay, so recently we have co-authored a number of user research papers with different Big 4 different major consultants in different regions. And there's some interesting user research findings maybe I can share with you guys. Okay, first of all, what we found is that if you look at the different buckets of the customers, right? The ultra high net worth, I think it will continue to be served by people. Okay, and those are complex products. Those are not areas that we are going to tap into either. Okay, now the second bucket is the mass affluent segment. Okay, mass affluent segment, it will feature that they have higher education. Most of them come with a college degree. They have dispensable income, and how I define it is people who drink a Starbucks coffee every day, right? Starbucks coffee is not cheap, right? And so if you look at this bucket of customers, they actually don't want to be sold. Okay, that's what we find. I think they
like the feeling of making their own choices, being independent, and not being like taken for a ride by some slick salesperson.
Exactly. And they have the high education level, so they understand what is deductible, what is copay, what is those terms. They have no problem to understand those things, right? But what they really want is that they want to, whenever they need help, someone is going to be there for them.
Okay.
So it's not to be sold. It's that they control their own destiny. They have choice, and then they want to bring out the phone and then make any decisions whenever they want to.
It's not to be sold, but it is to be serviced.
Exactly. So I think that is the customer segment that we really focus on. Now, the third segment is the grassroots, which interestingly, in our user research, they actually need to be served by the agents and brokers, because they do need some help in helping out for them to understand the different insurance terms. Okay, so I think the traditional thinking is that the conventional wisdom is that insurance is to be sold, not to be bought. And I think there's some change here, at least starting with the mass affluent segment.
Okay, so then let's talk about what OneDegree has actually done. You talk about full stack, but you're at least best known for being in Hong Kong as a consumer-facing insurtech in the pet insurance niche. So how did you settle on that, and what is it about pet insurance, which seems kind of fluffy and trivial? What is it about pet insurance that opens the door for you to do more?
Right. Well, so I think indeed, James, you're absolutely right about it. I think in the first year, back in last year, I think pretty much our sole focus has been on pet insurance. But by now we do roll out one product per quarter, and pretty much anything but life. We are in a very broad product segment on that. Okay. Now, the reason why we started off with pets is, one, we do see a glaring gap in the market. That is not well served. So what we see is that if you look at the number of dogs and cats in the major developed markets in Asia, Japan, Korea, tier 1, tier 2 cities in China, Taiwan, Hong Kong, and so on, the number of them is more than the number of kids under 10-year-old. Okay.
Right.
So it is a segment that is a big segment. Okay, in Europe, this is already a top 3 GI product line. Okay, but in Asia, this is a largely ignored market. I think partly because of the distribution channel, that it is still solely reliant on brokers and agents.
Well, also I think just that it's traditionally been a very expensive product. And maybe that's because of the distribution constraints, but it's considered expensive, and that if you're wealthy enough to be able to manage having some pets, then when the pet gets sick, you can probably just pay for it out of pocket, and it probably ends up being about the same. At least people calculate it's about the same as if they bought insurance, so why buy it? So we've seen companies like Manulife get out of pet insurance. It just doesn't make money. Very few insurers actually have this product at all in Asia.
Yeah, well, I think the reason why they get out of it is not exactly because this product, there's no market or what. It's also not because the consumers are not willing to pay for that. I think if you look at the European market, in Sweden, is UK, that you see 30 to 50% penetration. rates, Japan, Australia, etc. as well. So I think those markets people are able to pay out of pocket as well. Okay.
What's been the problem in Asia?
I think the problem is several folds. I think number one is that there is surely no focus on this product. Okay, so if you look at the ones that have been doing really well in this product, well, it's Lemonade in US, Trumpanion in US, Anycom in Japan, bought by many in Europe. For these companies, pet insurance is the first or either the first or second product they launch. They really put a lot of focus to make this product right. Because if you don't really put the focus to make this product right, then you know, it will just be a drop in the bucket as compared to motor insurance, as compared to life insurance, etc. Right? So there have been a lot of problems that they have not been able to solve. To give you some examples of that, when we first come into the market, we noticed that the number of customers having inquiries or visiting our website, a web app, and all that is really 50-50 between dogs and cat owners. But when it comes to conversion, it's 95% of them are dogs, only 5% of them are cats.
So what does that tell you about cat people?
Well, it doesn't tell, well, it's not about cat people. I think it's about the insurance problem. Okay. So they are not able to crack this problem despite having been in the market for more than 10 years. Okay, so we did some work in controlling fraud and different risk management measures, and we come up with a way that would allow cat owners to also buy insurance despite not having the microchips.
How much of that is because of your focus in an area and you had a team dedicated to solving these issues versus, you know, the use of technology or the way that you're set up? Like, what made it possible for you to go down this path?
I think the use of technology is a key part of it as well, and so is the team's focus and customer centricity. I think both are very key factors.
So what's the tech differential versus what a big incumbent could bring to bear on this?
Right. Okay. That's a great question. So typically, when it comes to the product iteration, right now there's a lot of hard coding.
Hard coding. Mm-hmm.
Yeah. And for us, our system approach is using a so-called no code or light code approach, meaning that as a product manager, as a customer service, as a claim adjudicator, it will be based on the persona of the different functions that they can really change the system, change the product setting, and so on, really easy. So for us, for some of the product, once you get on the standard API, it basically would take you less than 10 days or sometimes even 10 minutes to configure a product. Whereas if it's hard coding, it's really prone to errors and it's really difficult to really figure out how to change a product. So typically that life cycle of doing product iteration would take you some 6 months to 9 months.
And so are you talking about your own customer facing business, or are you talking about this in terms of a B2B product that you would be selling to other carriers or to agent networks?
It's actually both, because we first use our own proprietary system for our own virtual insurer, and then we are also licensing this to the various global and regional insurers in the market. Okay.
And so at this stage, or at least once you got your license from the insurance authority in Hong Kong, were you licensed in perception as a consumer-facing insurance company, or as somebody that was as a tech provider enabling other insurance companies to do better?
Yeah, well, that's a great question. So, so two things. One is that you've looked at what the insurance authority in the press release talking about us coming out and getting the insurance license. It does say that we are doing both business, and this is actually what the regulator really love about us, because we don't see other insurance company as competitor. Rather, we really see other insurance company as a partner that we can maximize the impact of our technology. Okay, I think that's one. Two is we also make it as two separate companies. Okay, and two separate teams, two separate companies, and I think this is how we serve the different insurance company as well.
When you're working with third-party insurance companies, you're coming to them initially with a product that they have struggled to deal with or they have ignored. Will this business model still be working when you get into, health care and other areas where it's directly impacting their own business?
Yeah, well, that's so interestingly, most of the insurance company who are working with us is actually on medical space. Okay, and gradually it has also branched out to motor, to travel, and to pet also as well. So I think for them, obviously they need to find a product that's really moved the needle for the business, right? So I think most of them would start off with medical, okay, which is a product that we haven't really rolled out on the B2C side yet, okay. So I think that's one. Number two is that I think a lot of the more forward-looking guys are really seeing the opportunity in new channels. For example, the telecom operator channel, for example, the e-commerce channel, and different things to get it work. And also some others are starting to equip the customer service or the agents a iPad or a tablet computer. That also is where they are thinking about how to upgrade the agency or broker force to keep up to the pace.
Right, and so you want to help them with that entire range of capabilities.
I think we are mostly doing it on the core system or on the back-end side of things, but also on the distribution side. Obviously, we have a lot of experience of that. We are very happy to share it with the different insurance company as well in how to really get to that product market fit and also get to that high conversion rates and this good unit economics.
What do you see when you talk to the big insurance companies, Alvin? What do you sense is their biggest challenge right now, and where they see Insurtech being able to take their traditional businesses?
Yeah, I think what they are, I think everything really changed ever since COVID, right? So I think they do see the difficulty in conducting face-to-face business.
Right.
Right. They also see the difficulty in when the claims are flying into the office while the staff are working from home. Yes. Right. So it's really pinpoints everywhere. I do see they still have more focus on the distribution side of things, but I think it's really pinpoints everywhere. So we do see requests on different places. So we now modularize on a few things. I think the distribution side, I think a lot of people love to work with us. Mm-hmm. And then going to the policy administration, going to the really having a 360-degree understanding of the consumer in where we can service them better and cross-selling as well.
How easy or difficult is it to work with partners, even if they're extremely happy and eager to work with you? Because an insurance company, their core system, all the way to claims and everything in between, it's all kind of interconnected. I think one reason why they've struggled to make the leap to digital is because you can't just do it modularly, or at least maybe I'm wrong, maybe you can, but they've just struggled with that. Can you talk to me a little bit about how do you approach such an interconnected process at these gigantic companies? Yeah,
I think the quick fix of that is to use a middleware, mm-hmm. Which we do provide to the insurance company. So on that basis, the time to launch a product is actually not that bad. So for example, I think for one of the insurance company, I think from the after they have defined the products that they want to sell, okay, it does take them only about 4 months' time to launch on our platform and to commercialize to the consumers, right? So I think there are different ways in doing this, and I think most of the insurance company right now, they either would like to use the middleware piece, or they might use a second brand, which you start to see a lot of insurance company investing in digital insurance, digital bank, and different places, and that's another way to go as well.
OneDegree is now about 5 years old in terms of being an operating entity, one year with a license. Where do you see it in the next 5 years?
Next 5 years, we do expect to have geographical presence in 5 different continents. Okay, So right now, in fact, in addition to Hong Kong, where you got a first insurance license, in China, we have a national broker license. Okay, in Southeast Asia and North Asia as well, we have a B2B business that we are licensing our technology to different insurance company. In addition to that, in Europe, there are also European insurers and Insurtech companies who come and partner with us as well.
Mm-hmm.
Okay. So after having a stronghold in Asia, we are going to Europe, and then we expect to go to 5 continents in 5 years' time.
I love the ambition, Kelvin, and it's Alvin, and it would be great. It would be great to see a Hong Kong Insurtech be able to conquer the world. But I also noticed that you started off with this super focus, real niche on the pet insurance thing as a way to get started. You figured out how to do that, and you're making that work. Now we're talking about B2B and B2C, 5 continents, 5 years. Is there a risk that you're going to just go from that intense focus and making a win to something that might be much harder to manage?
Yeah, so we do make it as separate entity and separate team. So from a team point of view, it is laser focused. Absolutely. There's no deviation from the focus or anything like that. But what I want to say is that the B2C and the B2B part have really strong synergy. And it is almost like a flywheel between the two businesses. So when we do the technology piece of it, this is the reason why we can do the product iteration so fast on the B2C side. A lot of the digital insurers in Asia actually do not have their own proprietary technology. Okay, it is only still the front end side of things. So that doesn't really fundamentally change the user experience. Okay, and given that we have the B2B business, we have the technology business, this really enables us on the B2C side to go so fast. Okay, I think that's number one. Number two, on the other hand, a lot of insurance companies come and knock on our door and say, hey, can we use this fantastic piece of technology to other markets? Okay, so right now we actually don't spend any money on the marketing on the B2B at all, but a lot of them just come to us and say they really want to work with us. And I think the B2C side of things, that is there's no better way to prove how well this is working by having a B2C product that we own it and we have the accountability of that.
Our product teams really set up for this? Because often when I talk to some incumbents, I hear often that it's very hard for them to get their head around designing products that are very simple, that are designed for digital. I'm making the assumption that you need that simplicity. But the traditional way of a product team in an insurance company will be, let's throw in everything except for the kitchen sink, a lot of riders and other bells and whistles, and then they bundle it and they charge a lot more. And they still often come to the digital front with a similar template in mind. Do you think that has to change, or do you think there is room for building in all that complexity into a digital product as well and be successful at it?
Jim, you are so right about this point. I can't agree with you more on this. So if you just bring a traditional product to online, it doesn't work in the digital world. The conversion rate is going to be horrific. Okay, but so what you really need to do is to completely rethink and redesign the product based on the assumption that it's 100% digital. Okay, it's on a self-help basis. So to illustrate on this, we do go and measure on how much time that each customer spend on each page. Okay, if you have 20 numbers on a smartphone screen, well, good luck with that. I think most people are just going to drop off, and the head is blowing, exploding, but so you really need to boil it down to a product that people can understand. Okay, and so typically what we say is within 2 screens, not more than 3 to 4 numbers. Okay, so the entire product has to be completely redesigned. I'm very grateful that I think over time, for example, the reinsurers really start to get this, and so they also they think about the entire journey in optimizing both the CAC and also the loss ratio, in thinking about how to cut down the number of underwriting questions. which is also extremely important, and how to use alternate data to aid in the underwriting process as well.
Okay. Alternative data is probably a whole other topic that we could spend a half hour chatting about. So maybe we'll leave that for another interview. Alvin, I want to really thank you for coming and talking to me at DigFin VOX. Good luck with the next steps for OneDegree.
Thank you, James, and thank you, the DigFin team.